Good morning and welcome back to another pipeline trading video. If you're anything like me, you're already you have a few espressos in you, and if you don't, you might want to grab some right now. So let's talk about today's session, and this one's interesting because if you came in expecting a clean trend, yeah, the market had other plans for you and me. What we're seeing right now is not a breakdown. It's not even real weakness. This is something that threw me off because it's a rotation, which I was discussing yesterday. On the daily, I was anticipating, a greater pullback into this level, which is where we broke structure to make its new high. Um, and I didn't anticipate that we're going to have a V-shaped recovery as fast as we did. We only dropped 10% on the S&P, and I shouldn't say only. It's a healthy correction. That's what you want to see. And on the Nasdaq, we saw a 12% pullback. Now, what threw me off is the rotation of things. And I said this before: if you're on the wrong side, the market will humble you real quick. So let's start with the big picture because this is something I've been doing a lot of reflecting on. We know that the market's pushed to all-time highs. We're holding around the 7,100 on the S&P. Slight pullback, nothing crazy. This is not panic. This is the market taking a breather. Like you just ran a marathon, now you're grabbing some water on the sidelines. Meanwhile, oil's been creeping up, and geopolitical or geopolitics, whatever you would, geopolitical conflicts, those are heating up as well. So in the background, you've got a little voice saying, "Hey, don't get too comfortable there, pal, because things can change real quick." And that was kind of where my mind was more and still is, but not as much. When I look at this weekly chart on the markets, the moving average have crossed up. This is on the weekly, not the daily. That's bullish. We got these three big candles, could get a pullback, maybe even, if you look on the Nasdaq, a pullback to 25,962. We could get a pullback on the S&P, 6941, a little lower. But ultimately, it looks strong, and we could see more upside. And this could be the blow off top that everybody's been expecting. Now, let's talk about what's actually moving prices, because this is where it gets fun. First up to bat, we got Tesla. And Tesla drops earnings, beats expectations, and the stock goes down. Classic. This is like showing up to a party with pizza that everyone likes. Everyone likes it. And they look and they say, "Yeah, but why didn't you bring wings?" That's what this is. The issue? Massive spending. 25 billion plus. And when I really think of it, and I've heard this one a lot in my life, this is the market right now. It's not in the mood for "trust me, bro, trust me, I'll pay it off later." We've all heard that one, right? It wants results now. So Tesla gets sold. That's simple. That's not random. That's a signal. That's the market signaling what they're willing to take and what they're not willing to take. Next, I'm not going to go onto the chart, but ServiceNow, because I don't really follow them that much. This one didn't just get sold, it got thrown out the window. Stock down hard after earnings, even with strong AI demand. Why? Margins. And it's the same story. This is where expectations start to hurt people, because when everyone expects perfection, Anything less feels like failure. Dad, is that you? Um, but now let's flip it because there are some stocks, while some stocks are getting punished, others are getting treated like royalty, the golden egg, right? So I'll go into this one, and if you haven't paid attention, you should know what I'm going to be bringing up. This is Intel. Intel, and there's two sides to this that I'm going to cover. Um, Intel just dropped a massive earnings report and strong guidance, which again, no one has heard anything really that positive about them for a while. So the fact that they beat earnings and had strong guidance, I'm not surprised that it's ripping up because they were the biggest chipset maker in the world at one point, right? And Intel's pretty much saying, yeah, I'm back, baby. So the stock's ripping after hours. And what's driving it, just to give you a quick breakdown, it's AI infrastructure, data centers, and obviously their chips. Basically, the stuff that actually powers all this AI hype everyone's talking about. So when you zoom out here, the truth, the market isn't breaking, it's rotating. They're rotating out of software and extended names, and they're rotating into semiconductors and AI infrastructure. And if you look, again, this is huge. We're gapping up again today. And I made a video. This started when I first talked about this at 91%. No, 89. Okay. And I said, I'm looking to put a short on, which that hasn't changed because this is massively overextended. And it could because the amount of money that's going into AI is huge. Companies, I believe, long term are going to be more profitable with AI. I don't know if it's going to, I don't think it's really going to be the greatest thing for the economy because a lot of people are going to be out of jobs. And unless you're willing to reinvent yourself, learn new things, you're going to have a difficult time. A lot of people have a hard time reinventing themselves, especially with how fast things are changing. It's unprecedented. This has never happened before in history. So it is a little scary, but at the same time, looking at it from valuation points, companies are laying off. You're seeing it all over the news. Nike, all these big names are still, laying people off left, right, and center. I don't know off the top of my head, but I was hearing like, and you're not talking like 2 or 3%. Some are like 10, 12, 15% of their workforce are just laying off. So that's not good, right? But at the same time, for companies, they're becoming more profitable, right? They're trimming fat. Even Procter and Gamble, they smashed earnings as sales grow 7%. Like those are good names that they're going to be here. The products that they sell, we all need, right? So that's another thing to keep your eye on. So let's talk execution because this is where investors either make money or donate it. So if we look at Intel, I'm going to go back to Intel here. This is what I want to discuss. This is the main event. It's the best way I could put it. This is your number one trade today. This is my trade idea. Big gap up, big momentum, big attention. You have the volatility if you're going to trade it intraday. I'll go into swing trading it if you're going to do that. Again, this isn't financial advice. This is just ideas, educational, give you a different view. And of course, you do what's in your comfort, what's in your scope, and how you do things. Don't make any decisions based off of what I'm doing. Just something to think about. Um, because a big gap up, big momentum, big attention. This is where this is the mistake everyone makes. They chase the open. right? And you don't want to do that. And then 10 minutes later, they're like, why am I down already? I thought this was like the trade of the century. This is gapping up 20%. This is like huge. Yeah, don't do that. Here's the plan. Let's let the stock open, let it pull back. If it holds above VWAP, that's your signal. That's where you know institutions are in. They're going to hold it, they're going to keep it. That's institutions stepping in and saying, yeah, we're buying this. Remember what I said yesterday? A lot of people think institutions are sitting here looking for your, measly 200 shares of, stop loss to take it out and say, ah, I got you. It's not what they do. They're looking to buy at key levels. And they know that at certain levels, people have stop losses. That's where they're going to find their liquidity. It's not as intentional as people think. It's just literally common sense. If you know anything about trading, you're looking, these guys are taught. First thing they're taught is trade key levels. They're not looking at all the technical analysis and all that stuff. And they wouldn't be able to with the amount of capital that they're putting to work, right? So I lost my train of thought there. I went for a bit of a rant. That's the entry. You want to see where the big boys are buying. They're going to be holding it at VWAP, and that's your momentum trigger. And if that goes, you could be looking at a full trend day. Let it pull back, hold VWAP, and go. Now let's talk the flip side. The flip side of this, the risk, is Intel can absolutely fake everyone out. This has happened to me more than I'd like to admit. If it gaps up and immediately dumps and loses VWAP, that's not strength. That's a trap. That's the same type of trap you can expect from a stage 5 clinger. Okay? This is where traders get smoked trying to be the hero. At that point, step aside or flip your bias. Now, the secondary setup, because I'm feeling extra energetic and great today, I'm doing 2 trade ideas today. The next one's Tesla. This is the opposite energy. Good earnings, bad reaction. That's like the market saying, yeah, we heard you. We just don't care. Dad, is that you? So what you're looking for here is simple. Lower highs, weak bounce, rejection. And when you see that, that's your short setup. No guessing, no prediction, just reaction, right? Now, zoom back. And like if you're saying, okay, like short to where, like this should come down to probably 324 over the longer scope. If we were to break back down, it would be a secondary test. There's a lot of liquidity and we can make our next leg up. If it breaks this level, which we're seeing right here, and it goes for a bigger dive, then we would go potentially down to 277, right? This is as a swing. This is a bird's eye view of like where it can go. And those are levels that I would be interested in, taking her out for a date. Okay. I'm going to go back to the S&P, and this is the index is not trending clean today. It's just ranging, which means if you're buying the middle or shorting the middle, you're basically donating to someone who's waiting for better levels. So I would be waiting, like I said, for confirmation. Let's see a pullback. Let's see where it wants to hold. Let's see where the institutions want to hold her and coddle her for a bit. And then that's where you want to get into there. So your job is simple. respect the VWAP. That's volume weighted average price, right? Trade the edge, wait for confirmation, and stop trying to be first because it will burn you. Um, because in this market, first usually doesn't mean uh, anything. Your first means you're probably wrong, right? So your game plan: follow the strength in the semiconductors, especially Intel. Fade weakness um, in names like Tesla, right? Understand this is a rotation, it's not a collapse. And most importantly, invest, trade what's happening, not what you think should happen. So, if you found this helpful, subscribe, hit the bell icon to stay connected and the notification, and support. If you could do that, that would be great. And I will leave you like I always do. As always, stay disciplined, trade with intention, and God bless you all.